let's go to our friend Beimnet of BB Galaxy Digital Trading. Beimnet, great to see you in the new year.
Thanks for having me. Happy New Year, Alex.
Yeah, how were your holidays? And
they were great. You know, would have been better if crypto rallied a lot more, but
Yeah.
you know, I'll take whatever I can get.
At least it was relatively quiet, right? You know,
no middle of Christmas or New Year's,
like
calls or
dumps.
anything like
There
that.
was one, I remember, what would it have been, like maybe 2019, there was a pretty big dump right around the holidays that all the desks were sending color, like some poor person that was the one person keeping the lights on over the holiday.
Yeah. No, I mean, that's a story as old as time. You know, holiday season, teams are understaffed. A lot of young folks on the desks leads to,
Yep.
crazy moves in certain instances.
Especially our markets, which are 24/7, 365. All right, so let's get into it. I mean, we talked a lot about last year on the last podcast 2 weeks ago. So let's instead maybe look at today and a little bit going forward. It seems pretty quiet out there. I mean, Bitcoin volatility, I didn't rerun the table today, but we might be at like the lowest ever on a 30-day historical volatility basis.
It certainly feels that way.
Yeah.
It just speaks to an absence of activity, both buying and selling. I think a lot of the forced selling from miners has already gone through, and there's not really sort of new institutions like begging to pile into Bitcoin right now. In fact, honestly, I think the institutional side has been piling into traditional gold more so than Bitcoin.
Gold has been rallying.
It has
for
pretty
a month and a half or so.
Yeah.
Yeah.
It set its lows in like late October, early November. Around the mid 1600s, and it's now trading at like 1860 and change. It's kind of crazy in a year where, markets were down 20% and change, bonds were down 15% plus, dollar went up 15% and change.
Yeah.
Gold was actually flat in all of 2022, and it has started 2023 trading very well. I think, there's a number of reasons why it's trading well, but I think one, there's a general lack of positioning.
Yeah.
Two, I think you've had some central banks on the bid, as they're looking to move away from, sort of Western-based money. And also, just generally speaking, I think that there's pretty strong seasonals over the next, that have been happening. So those have been supporting kind of gold. Again, though, I think the same thesis should be applying for Bitcoin. And, I kind of think that eventually once people get comfortable with, counterparty risk and sort of more comfortable with the idea of investing in crypto again, I do think that you'll start to see the digital gold narrative start to take hold again, particularly if this year kind of plays out like I think it will, which is, very aggressive. Well, it really depends. But if you get a hard landing scenario, that's going to incite a very easy response from the Fed, a very aggressive response in terms of cutting rates and printing more money, and that should be good for things like crypto and Bitcoin if you do get to that hard landing and you have to switch.
Right.
But again, it's still tough.
Yeah.
To say.
So gold. What about other commodities? I mean, last year was a pretty big year for commodities in general.
No, absolutely. It was kind of like a roller coaster. Like last year, oil started kind of around here, like 70s, like 80s, then went up to like 120, 130, and then now just came back down to like the low 70s. And so it's been a roller coaster.
Right.
And I do think that fundamentally, we are setting up for renewed strength in the commodity complex. One of those key reasons being the Chinese reopening. Right. That's 1.4 billion people that have been saving money for 3 years. They're starting to travel again. I think once they get through this period of sort of mass infections and get closer to meaningful levels of herd immunity, that's going to be a lot of sort of activity that's going to go back into the economy that should be supportive of the commodity complex. In addition, I generally speaking, like the economy is like okay, like the U.S. is doing fine, the employment market is fine, it's healthy. I think that also sort of constructive for the commodity complex. And then the last component is really the dollar, right? Every commodity is based on the price of dollars. And I just kind of I'm a little bearish the dollar here in the context of, if you think about what the risks are in the market and, it's inflation shooting much, much higher. And the ECB, the BOJ, and other, and those two central banks in particular have a lot more to go in terms of raising interest rate policy and tightening financial conditions. So if we go a lot higher in terms of, inflation, those currencies I think will do better. And then on the flip side, if we get the hard landing and stuff, again, just because of how far ahead the U.S. is, they're going to be cutting more aggressively.
Yeah, earlier.
And so
yeah.
earlier.
Yeah.
Or just they're cutting from a much higher level.
Right.
And so it kind of feels a little asymmetric on the dollar strength side of things. And so if you get a weaker dollar, a Chinese economy that's recovering, and sort of continued, strength in the U.S. economy, I think that could bode well for the commodity complex.
Interesting. So, and then I'm looking at equities. It looks pretty tepid out there.
Yeah.
I saw big tech is down a bit. Yeah, struggling.
Yeah.
It obviously has been, frankly, for a little while, though we had a little bit of a rally in the end of the year. Well, I don't, does it look anything? Does the picture look different? Or
No. I think the picture is really easy. Our CEO has been, pretty bang on about, how he's thinking about the market. And I think it's pretty consistent, with other folks, which is basically you're assuming, $220 per share in earnings in the S&P this year. That's without forecasts really moving down. And if you apply an S&P multiple of 17, that kind of gets you to where the S&P is right now.
Mm-hmm.
We don't really think that multiples are going to expand a lot because, interest rates are really high and the Fed's hawkish. So it's not like, earnings or multiples are really going to expand. And, there's a potential that they can go lower. But that kind of leaves you in a scenario where there isn't that much upside risk to stocks. And the downside risk, is there. But I'm not in the, panic,
doomsaying camp,
et cetera. But you're just kind of stuck in this place where you're not really expecting much in terms of returns. So really, what's the point of taking that risk?
Right.
I'd rather just go into, fixed income or better risk-adjusted products and not take the risk of being long a growth company or being long, tech that's hyper valued and things of that nature. So I kind of think equities just don't provide good risk reward here.
Yeah.
And that you're just supposed to wait for extensions in one direction or the other if you're trying to trade it.
So and then back to crypto. I totally understand the current risk appetite environment, and there's a lot of external factors, macro and monetary policy in particular. But at some point, don't you look at these if we're talking about the majors, the Bitcoins and ETHs, don't you look at these if you have a long-term view at some point and say this might be a good entry? I mean, no one in big capital seems to be thinking that way yet. So I guess maybe the flip side of the question is how much downside risk do you think there still is in crypto? It's hard to know, obviously. So this is more of a.
Yeah, am I allowed to talk about single name protocols?
Yeah, we can talk about Bitcoin and ETH for sure.
Oh, got it. But not. Well, let's just say that there's still a lot of froth in this market, in my opinion.
There is.
There
are definitely a lot of protocols
that are very overvalued
and have very limited usage for sure. The sort of L1 trades from 2021 and 2 still hanging over.
Exactly. There's still tons of meme tokens that have a lot of value that. I think is dubious. There's one that's going crazy on Solana right now. I saw this. For example,
Bonk.
Yeah.
Now this is just a random meme token. I mean, we don't know anything about this.
Yeah. Apparently, there's utility. And you're going to get staking. You're going to borrow against it.
Staking is not utility. Okay.
But right now,
that froth is still there.
That froth is still there. So taking a step back, there's my landscape of crypto is, you've got long only types that believe in, the sort of big tokens.
Yeah.
And you've got, the venture guys that are just, playing in the venture arena. Then you've got, your sort of speculators, your professional speculators and market makers. And then you've got retail.
Yeah.
Retail, they're basically not coming back for a really long time. They've gotten hurt a lot. $900 million in Gemini Earn, UST Luna collapse, FTX,
Hacks,
Voyager,
Bridge hacks,
Celsius, Bridge hacks, NFTs that have come down a lot in price, meme tokens that have come down a lot in price. It's not just in crypto, but in stock markets, they've also done poorly. So I think retail's on the mend. You've got a lot of, market makers that were taken out on stretchers because of, at
the various
FTX,
collapses,
etc. And then speculators, they're a little bit limited right now because one, they lost liquidity of a major exchange with perps, etc. The lending market is, frozen a lot.
Right.
So, that leaves you with, pro v pro market, which is, speculators versus speculators and, trickles of long only and venture money coming in. But you also have to think about, the supply that's coming into the market. Obviously there's the Bitcoin supply, but there's still venture positions that are unlocking.
Yeah, for
year.
particularly on those alt L1s,
Correct.
right? There's a lot of those, yeah.
And then there's stuff that has to get sold as a function of bankruptcies. So we know about supply, and we know that, the speculation in one direction or the other is not going to go that extreme.
Yeah.
And then you have to put that in the context of like, what is the liquidity like in the market? And liquidity is not great, particularly versus like, 3 to 6 months ago.
Yeah.
Even though you might, kind of be deceived, by like the headline figures. Yeah, okay, there's a couple yards of Bitcoin that traded between 16.8 and 16.7.
Yeah.
When it's been trading there for, a week or whatever.
Yeah.
So point is, liquidity's thin. Market participants have shrunk. The pie has definitely shrunk. There's still supply coming in, and there's still tokens that are, in theory, worth probably more than they should be.
Yeah.
And then the kind of other thing to think about is like, in terms of like what is there to do in crypto right now, if it isn't to speculate, it's to yield farm. But the yield farm opportunities aren't really there, and they're probably not worth it on a risk-adjusted basis right now in terms of smart contract risk, bridging,
especially with all the fixed income rates where they are as well.
Yeah, and you're not getting paid on your stables unless you're farming, and so it's a very tricky outlook for the market. But in terms of like the players in the space and trying to understand the market construct, it's actually pretty clear right now.
Very, very interesting. So we're going to be waiting around then, I guess, and it seems like a lot of the markets are pretty, not just crypto, but equities too. We're sort of range bound. Is your outlook for the, near medium term?
I think range bound is fine, but the way I would think about it is I think more than any other time in markets, I think you just have to be respectful of like new information, right? Like being data dependent, essentially, like the Fed claims they are. But it's like if you see, unemployment start to tick up massively, like, yeah, okay, we might be going into a harder landing scenario, but I don't think that's the case.
Right, but you got to be focusing on that data.
On the data.
Yeah.
Right? And economic data and little signs here and there. I mean, there's a central bank that hasn't even gotten off negative rates yet, and their bond market has just started to move, and you could cause, there's some pretty scary tail scenarios about, Asia FX and fixed income, if the Bank of Japan really starts going.
Yeah.
And so you just have to be, kind of nimble and data dependent. And that's kind of what I would recommend to folks for this year.
If you liked our conversation with Beimnet, recall that it's part of our weekly podcast, Galaxy Brains, which you can listen to everywhere on every platform, and check out all the links are at galaxybrains.io.